It's Friday, April the 15th, and we end the day 16,000 crowns up, 51,000 crowns up for the week, and year to date we are up 464,000 Swedish crowns. It's been a fairly good week. In euros, it's around 43,500 euros, or roughly just under 48,000 US dollars. Taking a look at the Standard & Poor 500, for the week it's down 2.26%, and that's continuing the slide down for the year. And year to date it's minus 8.4%. Percentage wise, year to date we're up 27.67%. For the week we're up 2.85%, and as we work our way through the different time frames, we see the month we're up just over 12%, the 3-month time period we're close to 15%, and the trailing year we're at 49.93%. Having a quick look at the composition of the portfolio, you see most of that pie is made up in finances, finance sector. 26% of the portfolio is in finances, and you see the biggest holdings are in ExxonMobil and Ultra Group. So as I've stated in prior videos, I'm focusing primarily on the finance sector, and so we'll see that 26.43% likely to go higher. Taking a look under the hood of the portfolio, I won't go through the whole list of shares that I own, but we'll just go through the top performers and the worst performers. And right at the top is ExxonMobil, and this year Exxon's gone up 53.31% for me, over 185,000 crowns. Ultra Group's also had a big start to the year, and that's gone up 92,500 Swedish crowns. And of that amount, just over 7,000 crowns is through dividends, and the rest through appreciation. Now, I'm not going to give you the play-by-play minutia like other channels do, because nothing brings someone faster to sleep than listening to someone second-by-second play-by-play. But I just want to show you the other performers that I've got in the portfolio. I've got Lockheed Martin, which is a defense contractor, and for obvious reasons, this stock has done quite well this year. Scrolling down, companies like AbbVie, Deere & Co, Merck, and Philip Morris have really done well this year. So now the part I'm sure everyone's keen to see, and which of the companies have I lost a stack of money on? So there's 3 companies in this lower tier group that are coming down that I don't actually mind seeing lower prices, as I'm trying to build sizable positions into them, and they are in Citigroup, in JP Morgan, and in Microsoft. So although losing money at any time is never ideal, since these companies are so high quality and generally trade above market indexes for very long periods of time, they will seldomly underperform broad markets, and when they do, it becomes an opportune time to start filling up and building up positions. So the lower prices ties in nicely to what I want to do, which is build up the financial services sector anyway. So alongside these 3 stocks, I'm also building up T. Rowe Price. Starbucks is the only big position which I've lost a stack of cash on. Pretty early on in the piece, it was a big conviction of mine, but a change of direction recently meant that I had to change the thesis on the company. So just like legendary investor Peter Lynch says, that holding your losers is like watering the weeds. When my investment thesis on Starbucks had changed, I had no hesitation in unloading the whole position. This is not to say that Starbucks isn't a world-class company, which it definitely is, but for the time being, Starbucks doesn't fit into my portfolio, and this portfolio is specifically tailored to my specific and unique needs. For those unfamiliar with Lynch, Lynch is a legendary fund manager who ran the Magellan Fund and averaged an annualized return of 29.2%. He's one of the guys that I model my investment philosophy on, and I highly recommend just going onto YouTube and typing in Peter Lynch and just watching some of his lectures that you can find online. Also, he's got a couple of books which I think are essential reads if you want to be a successful investor. My intention isn't to fanboy Peter Lynch, because my investment philosophy does diverge a little bit from his, but I do think watching a 45-minute lecture on Lynch and reading his 2 books, I think you're going to glean far more information and valuable content, and I think you should model and formulate an investing philosophy from those who can actually beat the market and have these outsized returns. It was because of the influence of Peter Lynch and other investors that I looked up to that I was able to formulate a strategy, and in August of 2021 I was able to retire and do what I'm doing now, which is traveling the world. Right now, I'm on the Pacific coast in Nicaragua in a place called San Juan del Sur, and I see myself spending the next 2 or 3 months just chilling out here. There's sort of an expat community here, and the place is known for surf. We're staying in this place up on the hill, overlooking the town and the beach, and for the month, it works out to be just under $300. The weather's warm, the food's good, and the cost of living's cheap, so it's happy days.